The pound just hit a wall at 1.3420 after 8 straight green days. CCI overbought, Williams % are in the danger zone, and the 1 hour chart has flipped to a strong sell. This is the trap that catches breakout chasers. Late longs are about to get liquidated. I've got a scalp short entry right here with a tight stop, targeting the pivot at 1.3370, and then a swing by zone once the correction cleans out weak hands. The pound versus the dollar just did something that should terrify anyone chasing this melt-up. 8 consecutive daily green candles, a vertical rally straight into a resistance zone that has rejected price multiple times this quarter. And right now, this very morning, the clock is ticking on a reversal pattern that almost nobody is talking about. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Do not turn this off before you see the exact level that will separate the trapped longs from the smart money. Write this down. If we break and close above 1.3445 today, the entire 8-day melt-up is not a top, it's a breakout, and I will flip fully bullish with both hands. But until that happens, we are fading this rally. The session bias is a corrective pullback inside a still intact daily uptrend. That means we scalp short right now, we wait for the liquidity flush, and then we swing long from a discount. The invalidation level is 1.3445. Price is currently 1.3356, already 90 pips off the high, but the real trap has not yet sprung. The herd is positioned heavily long, euphoric off the 8-day streak, and they've piled in right below the 200-day moving average cluster. Smart money is not buying here. Smart money is absorbing those longs into a distribution zone, and when the stop hunt begins, it will be violent. Let me walk you through the charts, because the alignment here is rare and exceptionally clean if you know where to look. On the weekly, the trend is neutral. We've been oscillating in a broad range roughly between 1.28 and 1.35 for months. This 8-day rally has lifted us from the lower boundary right back to the upper edge, and the weekly 200-period moving average sits just above at 1.3370, exactly where price is now struggling. The weekly MACD is still below zero, attempting to curl up, but no bullish crossover yet. That tells me this is still a counter-trend rally within a range, not a new bull market. Drop down to the daily chart. The daily trend says buy, and that's real. Price has cleanly broken above the 20-day moving average at 1.3317 and the 60-day at 1.3320. But here is what most traders miss. The 50-day moving average is at 1.3361, the 100-day at 1.3388, and the 200-day at 1.3370. That is a tight cluster of long-period moving averages all converging within 20 pips of each other, and all of them are above the current price of 1.3356. So while the daily trend is technically buy, price is still below the most important institutional moving averages. This is a battleground. To turn structurally bullish, the daily candle must close above 1.3388 and then hold that level. Until then, we are in a rally inside a range, and rallies into a confluence of Mars tend to get rejected hard the first time. Now, the 4-hour and the 1-hour, this is where the danger signal is flashing brightest. The 4-hour trend is listed as buy, but look at the oscillators. The CCI is at 135, well into overbought territory. The Stochastic is at 73 and curling down. Williams % is at -17, screaming overbought. And the 1-hour chart has flipped to a strong sell. That is a clear divergence between price structure and momentum. Price made a higher high near 1.3420, but the 1-hour MACD is printing a lower high, a hidden bearish divergence that typically resolves with a fast corrective drop. The 20-period moving average on the 1-hour is already starting to round over at 1.3370, and price has sliced below it. This is the first crack. Here is the exact support and resistance framework I am operating with. Pivot point for today is 1.3373. Key resistance levels: R1 at 1.3419, R2 at 1.3445, R3 at 1.3491. Key supports: S1 at 1.3347, S2 at 1.3301, S3 at 1.3275. The average true range over 14 periods is 80 pips, so the daily movement capability is significant. That means our scalp targets can comfortably grab 25 to 40 pips without chasing pennies. The ADX is at 29.8, which is above 25 but below 40, telling me the trend is strong. Enough to ride but not so extreme that a reversal is impossible. In fact, an ADX near 30 from a multi-day run often marks an exhaustion point when combined with overbought oscillators. Let me connect the fundamentals, because the pound has been rallying for a very specific reason, and that reason has not yet changed, but the market has priced it too far too fast. The 24-hour news headline says it all. Sterling holds near multi-week highs as dollar stays becalmed. The dollar is becalmed, no wind in its sails, because the Fed is now priced to pause, maybe even to cut, while the Bank of England remains stuck fighting sticky services inflation and is pushing back against rate cut expectations. That policy divergence, that yield spread widening in favor of the pound, is what drove this 8-day run. But here is the thing. An 8-day rally prices in a lot of good news. The market has already discounted a hawkish bow and a dovish federation. Any shift in that narrative, even a whisper, and the pound will get hammered. We have UK jobs data and US CPI prints lurking on the horizon, and I suspect the positioning right now is dangerously one-sided. The 1 to 2 week directional lean is this. I expect a near-term corrective flush that takes cable back toward the 1.3300 to 1.3275 support band, followed by a more sustainable rally if the bow remains hawkish and the dollar stays weak. But the event that invalidates that entire thesis is a daily close above 1.3445. If that happens, the range breaks. And we are talking 1.36 quickly. Do you think cable breaks 1.35 this month? Comment yes or no. I'm tracking the consensus in this community and I'll pin the best reasoning. Now, this is where the money is made. Most people skip this section, and that's exactly why they remain average. Keep watching, because the next two setups are actionable right now, and the swing plan will give you the framework for the next leg. The first strategy is what I call the opening scalp, a fade at the resistance zone that targets the intraday mean reversion. Here is the logic. The 15-minute chart shows a clear structural rejection at 1.3415 to 1.3420, with a long-wick doji followed by a bearish engulfing candle. The 5-minute chart is printing lower highs. The trigger for this scalp short is a retest of the 1.3410 resistance level, followed by a bearish engulfing close on the 5-minute candle. If price taps 1.3410 to 1.3420 and the very next 5-minute candle closes below its open and below the prior candle's low, you enter short. Stop loss goes at 1.3450, just above R2, giving you a 40 pip cushion to avoid the noise. Take profit 1 is set at 1.3373. Today's pivot, a clean 37 pips, giving a risk reward of nearly 1:1 with a high hit rate. Take profit 2, if momentum accelerates, is at 1.3347, the S1 support, for a total of 63 pips. That is a 1 minute and 1.6 seconds risk reward on the second target. What instantly voids this scalp? If the 5-minute candle closes above 1.3445, the structure is broken, the breakout is real, and you must cut the short immediately. No hesitation. The opening SCLP entry, 1.3412, 5M bearish engulfing after tap of 1.3410 to 1.3420, stop loss, 1.3450 take profit 1, 1.3373 take profit 2, 1.3347 risk, reward, 1:1.0R to 1:1.6R invalidation, 5M candle close above 1.3445. The second strategy is the liquidity grab, a counternoise scalp that exploits the stop hunt just beyond a session high or low. Here is how it works. Once the initial fade begins and price drops towards the pivot at 1.3373, there will be a pocket of late breakout traders who bought the rally at the top. Their stops are sitting just below the most obvious intraday swing low that formed during the London session. The market will likely spike below 1.3347 to trigger those stops, sweep liquidity, and then violently reverse. My entry is not on the breakdown. I wait for the fakeout. Price must first breach 1.3347, ideally down to around 1.3330, and then within the next 2 5-minute candles, print a bullish engulfing that closes back above 1.3350. That is your trigger to go long. Stop loss is placed at 1.3325, just below the spike low, so you are risking 25 pips. The fast target is the pivot at 1.3373, a 48 pip gain, giving you a phenomenal 1 minute and 1.9 seconds risk reward. This is a scalper's delight, but it requires fast fingers and strict discipline. Do not enter if the bullish engulfing candle fails to clear 1.3350 convincingly. Warning: this setup works best in the first 2 hours of the London session when stop hunts are most aggressive. Are you scalping or swinging this week? Comment scalp or swing right now. I want to see where this community sits, because the sentiment balance right now is telling me most retail is chasing, and we need to be on the other side. The liquidity GBP entry, 1.3352, 5M bullish engulfing after false break below 1.3347, reclaiming 1.3350, stop loss, 1.3325 take profit 1.3373 risk, reward, 1:1.9 R invalidation, failure to close above 1.3350 within 2 5M candles now. The third strategy is the session swing. This is for those who want to align with the higher timeframe trend and capture a multi-day move. The daily trend is buy, and I do believe that once this overbought froth is cleared, the pound will attempt another leg higher. But you cannot buy here. You buy at a discount. The trigger for this swing long is a 4-hour close above the 60-period moving average, which currently sits at 1.3320 and is starting to curl higher. I want to see price pull back into the 1.3300 to 1.3275 support zone, ideally with a bullish MACD crossover on the 4-hour chart. That means a dip to S2 or S3, a period of consolidation, and then a strong 4-hour candle closing green and reclaiming the MA. Entry is on a 4-hour close above 1.3315. Stop loss is placed at 1.3265, below the S3 level and the last structural low, risking 50 pips. Conservative take profit 1 is set at 1.3445, the R2 resistance and the breakout point, delivering a 130 pip gain and a 1 minute and 2.6 seconds risk reward. The stretch target, if the dollar weakens further, is 1.3500, the psychological round number and R3 zone, for 185 pips and a 1 minute and 3.7 seconds risk reward. Once price reaches halfway to TP1, around 1.3380, I move my stop loss to break even plus a few pips. The invalidation level that would kill this swing is a daily close below 1.3275. If that happens, the range support has broken, and the daily trend flips back to sell. No exceptions that the session SNG entry, 1.3315, for H close above 60 MA with bullish MACD cross after pullback, stop loss, 1.3265 take profit 1.3445 take profit 2, 1.3500 risk, reward, 1:2.6 R to 1:3.7 R invalidation. Daily close below 1.3275 never risk more than 1 to 2% per trade. Scalps demand even tighter risk. No positions through high-impact UK or US news. Stops are non-negotiable. This is how you survive to trade the next big move. The 8-day rally has built complacency. Do not be the trader who gives back a week of gains in one reckless session. Here is your single most critical level for the next session, 1.3347. S1. If that level holds on a closing basis today, the bull flag is intact and the swing long setup I just outlined is alive. If 1.3347 breaks and we close below it, the correction accelerates, and we are headed straight to 1.3300 and probably 1.3275. That would shake out the late longs and set up the perfect re-entry for the next leg. Tomorrow, we have the US session reacting to any fresh headlines, but the real wildcard is the UK GDP preview that could hit the tape any day now. If that number surprises to the downside, the entire rate differential story flips, and this 8-day rally will look like a bull trap in hindsight. If this level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now if you want the full breakdown on Bitcoin's divergence with the euro and why it matters for risk appetite across all dollar pairs. That video is live now. Tap the card at the top right. That video directly connects to the dollar weakness story, and you need to see what BTC is doing before you commit to a direction on cable. Then hit the bell so tomorrow's alert lands before the London Open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the institutions move. I'll see you in the comments, and I'll be watching that 1.3445 level with you. Scalp the noise. Swing the trend.